Cohen he lives down here.
Okay.
He's the one that kind of started this all with.
All right, good afternoon. We want to welcome everybody to our WPTV app, also WPTV.com, and on our Facebook page. We're here to kind of understand a little bit about what's going on with the stock market and GameStop and Reddit. It's been a crazy week if you've been paying attention to any of the news out there. I am joined by Keith Singer, who is with Singer Wealth Advisors in Boca Raton. Good afternoon, Keith.
Good afternoon, Matt. How are you?
Good. So did you make any money this week?
I actually made some good money. I got lucky on AMC, held it for 24 hours, got out when the getting was good.
All right, so a lot of people made money this week. What exactly happened? What was the mechanism of how the stock, especially in GameStop, went so crazy?
It's really interesting. GameStop is a brick and mortar store that sells video games. The stock market is not excited about that kind of business, right? But it was trading around $4 a share this summer. A gentleman named Ryan Cohen, who started a company called Chewy and sold it for $3.5 billion. He lives down in South Florida. He started accumulating stock and became one of the major shareholders and a shareholder activist. And he started trying to change the business model from brick and mortar to e-commerce, and he successfully pulled that off. So the stock was starting to get some buzz, but not this kind of buzz. But on chat rooms in Reddit, there's a chat room called Wall Street Bets. And they were, promoting the stock and people were buying it. But more importantly, Matt, they were very angry at the institutional short sellers. There's companies out there that try to borrow stock, drive the price down, and then sell it for a profit. And so really they're profiting off of other companies' misfortunes, and they're actually, in some people's opinions, contributing to those misfortunes. So these funds that publish which companies they're shorting, they became a target. And if you look, I personally read some of the comments. It's more than just investing. People are saying, I don't care about the money. We're never selling. We want to drive these. We want to combine forces and drive these short sellers out of business. So what happens is when the price starts to go up, the companies that are short selling, they borrow the stock. Now they have to buy it back. And that makes the price go up even more. And then people who haven't covered, it keeps going. It's like a rocket. So the price is there's no business being over 300 or even over 50, really, for that matter. But it is.
We've talked a lot about the stock market, and stock prices are driven by hard facts, right? Earnings and projections.
Ultimately, in the long run, not in the short run.
Right. This was just completely an artificial inflation, right? Because so many people kept buying it, and the price kept going up because there was demand for more shares.
Correct. A price is worth whatever people are willing to pay. Ultimately, they're willing to pay based on what earnings are going to be. But in the short term, some people are willing to pay because they think it'll be worth more and they'll have a chance to sell before it comes back down.
Right. So ultimately, it's going to come back down. Right?
Ultimately, it's going to come back down because the company doesn't make nearly enough profits to justify this valuation. Okay.
So what happened? Yeah. Listen, I know you're not a lawyer, but in your estimation here,
I am a lawyer.
You are a lawyer. Okay. Was there anything illegal here?
It's an interesting thing. I think you might see some laws because it's illegal for insiders to manipulate the stock. It's illegal for insiders to make comments about the stock, someone who has inside information or someone who's potentially a controlling shareholder. But this was a bunch of individual people, small retail investors, banding together and manipulating the stock in the aggregate. And each one on their own, it's not manipulation, but together it's certainly manipulation. It's probably not against the law, but I think you might see the law change.
Now, I've heard that some very sophisticated stock traders and brokers do this to each other from time to time. There's a name for it, right? Short squeezing.
There's short squeeze, there's pump and dump, there's people that try to, make stock prices go up so they could sell. But short squeeze is the term when someone has borrowed the stock and sold it short, and their objective is to buy it back at a lower price and lock in a profit. But when the price starts going up, they get nervous because they don't have enough money to cover the losses, so they have to buy it back at a loss to stop the bleeding. and that's a short squeeze. It makes the price go up. We just witnessed what happens when you see a short squeeze. GameStop went from 20 to 500 almost.
So what do you think? This was like a populist movement against Wall Street?
It is, and other companies that have big short positions like AMC, like BlackBerry, they all went up quite a bit as well because people said, okay, if they're going after this one, what's the next one they're going to go after? And I'm sure there's people out there that are trying to just catch the wave and catch a little bit of it, catch some profit and get out. And there's some people that are going to get hurt. They're going to get caught holding the bag when these stocks do come back to earth and they paid a lot more than the stocks are worth. Hello.